This is the Collecting Real Estate Podcast. I'm your host, Stephen Purse, here with your co-host, Bill Hamill.
I'm somewhat more comfortable collecting real estate than I am collecting other stuff.
This is the Collecting Real Estate Podcast. I'm your host, Stephen Purse, here with your co-host, Bill Hamill. Bill, how has your investing been going recently?
My investing going recently, the deal flow doesn't seem to stop. It's funny, there's different parts of the year where you feel like you're not doing enough deals or getting into enough deals, and then two or three deals come across your plate. So our goal, or my goal rather, speaking for myself in 2021, was getting into four big deals, and that was accomplished. And 2022 was the same. I did not think that was going to be accomplished this year after the first one in March. But here I am, just did a deal on Monday, 20 unit in St. Petersburg, Florida, right in that wheelhouse of that area that we really want to focus on.
Well, congrats on the St. Pete deal. I know that was a good one. I was looking at a calendar this morning and realizing that since I started working on my first deal, the little duplex that I moved into, I've been working on a deal ever since, one at a time. It's really been like, okay, this one closes and then another one pops up and we start working on that. And it's been consistently one deal at a time since the start. And it's worked really well. And I was thinking, I don't know if I'll ever want to do more than one and what that would take to be able to focus on more than one at a time. But having one at a time is really exciting and it keeps you going, keeps the ball rolling. This morning we interviewed Bob Mastroianni. He is from Mastro Properties and he also has the Healthy Investor podcast. Great interview. We touched on a lot of tips in acquisitions, trying to build a team for larger multifamily assets around the country. Bill, what were some of your takeaways from it?
Well, Bob's he's looking to go from the Northeast where we are and venture down into the our area of focus. We seem to hear that all of the time, and I'm not surprised that that Tampa area has been phenomenal. At least the 2 years that I've begun building my portfolio.
It amazes me that 70% almost of investors I speak with, not only are they interested in Tampa, most of them want to move there too. It seems to really be attracting like-minded individuals from the Northeast right now. I don't think it's going to end anytime. I think it was a good one. Bob Mastroianni, thank you for being here this morning. Really excited for this interview. Let's get right into it. Tell us how you got into real estate investing.
All right, great. Bill and Stephen, thanks so much for having me on here. I really appreciate it. So, I guess back in 2008, my wife and I really began real estate investing as a bit of a side portion of our business, as a way to sort of create some additional income, and then eventually wanted to move into buy and hold to create some what we refer to as legacy wealth. First property I ever bought, I sort of joke about it. I bought it on Halloween 2008. And if you remember the history of the real estate market, about 2 weeks later, the market took its most significant plunge. So that was a fix and flip property. I had a partner on that opportunity. It was in Philadelphia. It actually took us a little while. We did a lot of the work ourselves, had some contractors helping us out. It took almost a year to finish that flip. And, we were fortunate. The government started doing a few incentive programs for first time home buyers. They were giving cash back at closing and some of those things. So we had a buyer who qualified but needed to settle by, I think the date was like November 15th of the following year. So we wound up making some money on the property. I think we split $32,000, which I know a lot of people who were losing money at that time. So it wound up being a really good learning experience. But I quickly realized that, the one time paycheck wasn't necessarily the route that I wanted to go. And we utilized that money to move into, we purchased a 3 unit property in Philadelphia, which we still have today. So fast forwarding a little bit, that was in 2010. Then in 2011, we bought a 2 unit. Um, fast forwarding, we've done right now today, I have 10 units total, which is a townhouse, 3 2-unit properties, and a 3-unit property, mostly in either the Philadelphia area or in South Jersey. And then over the course of time, I've done some more flip opportunities. I actually served as a acquisitions manager for about 3 years. Portion of that was doing a lot of wholesaling, and then I also was acquisitions manager for a fix and flip operator. So all told, I think there were like close to 60 deals that I worked in from that perspective, and have a lot of experience with probate, visiting people in their homes and helping them to avoid foreclosure and all those fun things. And just about everything I've done over the years, and I guess it's now about 14 years that I've been doing this, just about everything I've done over that time frame falls into, what we refer to as residential real estate, right? 4 units or less, residential financing, a lot of, banks looking at you personally for what they're willing to loan on the property or comparable to other properties in the area. And I made a decision sort of late 2021. And I'm trying to think of what year we're in, right? We're in 2022. So sort of late 2021, I made that decision that I was really going to try to go for what our long-term goal has always been, which is to move into larger multifamily. So, over the last year, a couple of the big things is obviously education, community. I joined the Jake and Gino community and have been learning and looking for opportunities in the larger multifamily realm. And then also, I recently began my own podcast. It's called the Healthy Investor Podcast. Another aside about me is that in my early 40s, I'm 47 now, in my early 40s, I realized that I needed to straighten out some things with my health. And I found enjoyment in training for runs and races. And then I eventually moved into some triathlon races. So found some fun in that. And one of the things that I've learned over the past 5 to 7 years is that many of the most successful business people, real estate investors, entrepreneurs really do have some sort of healthy habit or routine that is important to their life, oftentimes important to their mental state, important to their physical state for their health. And I'm finding that they continue to speak about how this is so important in their business, right? Because you have to get your mind right and you have to physically be right in a certain aspects. So I've taken on this podcast thing as sort of a fun way for me to interview and meet some successful real estate investors, entrepreneurs, learn about their habits. But I also have a little bit of a passion for educating others. So it's a really cool way for me, I find, to learn and educate sort of at the same time. So that's me. That kind of gets me to where we are today. I guess that took me almost 6 minutes. So I'm not sure exactly how long we wanted to go, but that's the intro.
Okay, well, this is all about you, Bob. I really appreciate you being on today. It's a fantastic overview of your, I guess you can say, 2008 till now. And a few questions come to mind here. I jotted down here mindset. We talk about mindset quite a bit on this show. And we talk about mindset in the personal development in the real estate world in general. I'm curious because I appreciate that 2008 purchase. The election for the presidency was right around that time, and I think that it was a blowout because literally the timing was brutal for the Republican side, where it was just a giveaway to Barack Obama to win that presidency because we were melting down as you were buying your first property,
Yeah.
and you successfully got it that flipped. Then you got into a 3 unit in 2010 and didn't do a lot of real estate investing from that point, but you were then an acquisitions manager for a company. Did you feel like through that period of time that you were making that company a lot of money through real estate as a W 2? What brought you, what took a little while to get you to the point where you wanted to buy multifamily?
Yeah, that's a great question. So I yes, I bought a 3 unit in 2010, a 2 unit in 2011, and then yeah, it wasn't until 2014 I bought the next 2 units. So it's a little bit spread out. And yeah, I do think there were certain um, mindset shifts that I needed to make on my own. You know, in one sense of the word, I look at the purchase in 2008, the purchase in 2010, the purchase in 2011, buying real estate in 2010 and 2011, you didn't have to go very far to find someone who would tell you how crazy you are to buy real
Yeah,
estate in
yeah,
2010 and 2011. And I think we all yeah, I think we all had that sort of network of people who are like, "What do you mean you're buying? Do you see what's happening in the real estate market? What do you mean you're buying a 3 unit property?" My 2 unit property, I actually was originally supposed to buy it with a partner, and when my offer was accepted at that same time frame, the partner bailed, and I had a choice to make. Do we bail on this thing? We haven't signed any contracts yet, or do we dive in? So, I think in some aspect, I think the mentality there was correct. But another aspect, I needed some mentality shift, some mindset shift. My wife and I went to a seminar right after we were married. We were married in 2006, and I think this was early 2007. And it was a real estate seminar. And back in that time frame, a lot of seminars were selling education, selling, big expensive mentorship programs. And I wasn't there. I wasn't in the right place where that would have made sense for me. But I remember the person who was running it. We had a little session at the end. Every person who was there sat down and they talked about what you're planning to do. And they talked to me a lot about, listen, you're freshly married, you just bought your first home, you don't have a ton of money in savings, start wholesaling. And the my mind instantly closed to that idea. I I thought it was a scam. I thought it was something that didn't really happen in the industry. I didn't really understand it. And fast forward to 2016, there was a local investor who I really wanted to work with. He was pretty successful and he was looking for someone to be an acquisitions manager. And I went and met with him and really wanted to work with him. I had learned a lot about, the successes that he had. And I really took it as the opportunity to learn from someone. And I just sort of said, this wholesaling thing actually works. And it's actually a good opportunity for me to really learn the business. And back to your initial point of your question about, was I making more money for the business than I was making for myself? Absolutely. I probably was making 15 to 20% of the wholesale price, right? So how can you look at that and say, "Oh man, I'm walking away with $2,000. I could have walked away with $10,000 on this opportunity." Absolutely. And then at some point I just looked at that and said, "Okay, it's time for me to move on my own." And I did that. But I think, one of the things that I have learned over the years is really about education. And for me, that was a really good opportunity, especially the first year and a half was a really good opportunity to just learn from someone who was doing it and know that in the long run, I'm going to have this skill, which I feel I have a strength in that I have this skill set now that no one could take away. And that money could have come and gone, but the skill set is there. So yeah, it is fair to say that I took some time in order to kind of get the ball rolling.
I like that we started with mindset. I think it's the single most important factor to real estate investing. And to your point about having that release, whether it's a sport or a musical instrument that you play, it's so important. And you can't have too many of them because then you're too distracted all over the place. Most people probably have three, maybe four things they focus on in life, and business and family are going to be the first two. So then you need that one, maybe two recreations to offset that and get the mind straight. So you have that mentality you need during the week. Going back to being an acquisitions manager and learning from someone else and that skill set that you developed that, as you mentioned, is going to be with you forever now in this investing career. Can you tell us more about that? Because I get really excited about acquisitions. That's the fun part, right? When we're finding deals, we're reeling them in and putting them together, structuring them. So, what did you learn as an acquisitions manager that's going to make you successful in this larger multifamily arena?
Well, there are certain portions of it that will roll over in the larger multifamily and certain portions that may not quite as much. Those conversations of you're losing your home and I can help you are difficult conversations.
Mhm.
In the larger multifamily arena, we're not saying to people, you're about to lose your home and I'll help you find a home and I'll help you make sure that you don't lose this home. It's a little bit of a different conversation. It's more, you have this property, you're not able to care for it properly. You are, you have deferred maintenance that you're having a tough time keeping up with. So I think the idea of being able to sit down and have genuine conversations with people, I think that's really important. I think that it's important to be able to listen and learn. And I feel like there were many times over that time period of 3 years where I sat on someone's couch in their home and discussed some of the difficult things that they were going through, and to be able to listen and learn and then try to find solutions. When you're an acquisitions manager, you can't show up with just one solution. And if you only have, it's like the saying, if you only have a hammer, then everything looks like a nail. If your only option, and you're looking at maybe fix and flip properties, if your only option is to buy the property for 50% of what it's worth, then you're not going to truly help the person. And I think it's created a bit of empathy in me of how can I help these people, and going into it with that mindset. Another thing that I spent a lot of time working with probate situations, and I've learned a lot about the probate process and what people are going through in a probate. And I think that will really play a key role in multifamily, because I think, when we look at these mom and pop multifamily opportunities, we look at sometimes it is because they're looking to sell it because someone has inherited the property, right? Grandpa owned this 25 unit property and he loved it, and he spent, it was part of his life's passion, but the grandchild inherited it and really has no interest in taking it over. And how can we help through the probate process? How can we help them to understand the probate process and those sort of things? So I feel like those are skills. And I feel like the softer skills really are a portion of the acquisitions manager. And again, problem solving, not everybody's situation is the same. And what are they looking for, right? Sometimes they're looking just to get out from under the property and want no cash in their pocket, just make my problem go away. And sometimes the answer is, I need X amount of dollars in order to do this, this, and that, because that's what they want, right? They want a certain amount of money. Okay, well then let's sort of back into that, right? What does that mean? Does that mean we do something creative on the financing end? Does it mean we do something creative on, maybe a subject to lease or something like that? So, yeah, I feel like those are the skills that I've acquired that will be continue to be helpful for me.
And those are amazing skills. That is a monstrous foundation to get going on the direct to seller. I'm not sure if you're actively contacting multifamily owners looking to get deals, but boy, you're set up for that. I appreciate the difficult discussions with wholesaling. I remember years ago where you educate yourself a bit and you see potential in that. And geez, I probably had less than 10 phone calls, and I just was not comfortable with solving someone's problem by saying, hey, I know you're underwater. I can get you out of it. You make nothing. I come in here, add value, and make a lot of money.
Yeah.
I just wasn't comfortable with it because there's so many other ways that you can make money in real estate. So I seem to stay with that conventional approach. And I guess it was more comfortable to go to a county courthouse auction when I'm dealing with the bank and I'm not
Yeah.
dealing with that homeowner that lost their house. They're already out of the picture. So once again, kind of a mindset thing. Also, that probate. I love the probate angle. I purchased a property a year and a half ago, and it was managed super well for years. Unfortunately, the owner passed. A year later, as it went through the probate process, the management fell apart,
Yeah.
and the family didn't have any interest in managing it. So there, a year later, on the estate sale, there's the opportunity with a half vacant multifamily
Hmm.
with rents way under market, and someone can come in here and do that templated value add approach and benefit. I guess with that long observation, the big question to you is, are you doing a lot of direct to seller to identify multifamily opportunities?
So I'm doing some direct to seller at this point, but my direct to seller are right now related to sellers who are raising their hand a little bit, right? So for sale by owner type sellers, I've reached out to a couple sellers who are listing properties for sale. So that's always kind of a good one, I'm sorry, listing properties for rent. So, you see rentals sit for a while. You see rentals that seem to, the unit seems to be valued pretty low, right? You're seeing rents in the area that are $800, and this guy's trying to rent one out for 550 just to get it filled. You know, those are good conversations because, hey, I saw your property listed for rent. I'm looking to purchase properties in your area. Do you have any interest in selling this property? Usually the answer is maybe.
Well, I love that because you know that they're under rented just by their apartment for rent, their apartment for rent ad. So if you're able to get into that property, it's served up.
Yeah, yeah. So I will admit that what I've done less of probably is actually broker relationships. So, um, that's probably a key indicator that I can spend more time on, which is building broker relationships and heading in that direction with broker relationships. Whereas I'm more looking at, individual property owners who are listing their properties on their own, kind of in a for sale by owner type manner, uh, or or potentially listing them, rentals and all that. So
That probably comes more naturally to you after the former career, going direct to seller on the residential stuff. And it does help to get scrappy like that and find creative ways to contact sellers, whether it's through an apartment for rent. You start that conversation. Maybe they're interested in seller financing, and that's a whole nother conversation and see where it goes from there. But if you didn't reach out, it would never conversation would never start. You mentioned doing residential in the Philly and Jersey areas. Are you looking to stay local on the larger multifamily, or are you trying to team up with some other Jake and Gino members around the country?
yeah, so I'm actually looking mostly to not be in this area. um, for a few reasons. I mean, I really like the Tampa area. I like the surroundings of Tampa, sort of Orlando to the Gulf Coast within a couple hours there. That's where I've been spending the majority of my time looking and analyzing deals. There's a few different reasons. Obviously, I like what's happening in the market there. I actually like the market. It's an area that I would like to move to in the upcoming, I don't know how many months or years, but it's an area that I would like to live in. Um, the Philadelphia market for me, a lot has changed in the Philadelphia market since I purchased my properties, and it's just heading in a direction where it's becoming less landlord friendly and significantly more tenant friendly, which is tough when you have an issue or concern. So, one of the opportunities that I'm looking at pretty seriously at this point is 1031ing some of the. And I'm sorry, I used the jargon term there, but using a 1031 exchange to essentially sell properties that are in the Philadelphia area, and then to avoid the tax implications around the gain on that, move it into another property. So I jokingly refer to it as the monopoly strategy, right? Build a couple properties and then use those properties to build to get bigger properties, and that's really what I'm looking into right now.
No, and that's a great technique. No one wants to pay taxes, especially real estate investors. It is served up for us when we're going to take advantage of selling a property. We're able to 1031 exchange it into another property and defer those proceeds to a later date. Hopefully, just continue to 1031 and run from that tax liability. Why wouldn't we?
Yeah.
And knowing that you're interested in going from Philadelphia down to that central Florida Gulf Coast area, that's where Stephen and I love. I've built up a small portfolio, and I am more ambitious in that Florida area than I am in the capital region of New York, where I've lived my entire life. So the big question to you, tell me, have you lived in that Philadelphia area your entire life? And what is that mindset to be able to say, I am going to leave this spot that I'm so familiar with, pack up and head to Florida? Do you feel like there's an attachment that's, forget about real estate, just difficult to leave that spot that you've lived so long?
Well, yeah, there's obviously familiarity. I mean, I lived in Philadelphia until I was in my mid 20s, and then I moved to South Jersey. My wife and I were married, and we've been in South Jersey since, I think I moved to South Jersey in 2005, and we were married in 2006. So, and I can get to Philadelphia in 20 minutes from where I am. So I'm right outside of Philadelphia, essentially. So, yeah, I've lived in this area my whole life. Family and friends, obviously, that's a big portion of it, and familiarity. Um, we do have a property at the Jersey Shore that we love and probably would not sell. So, so I think we would continue to maintain a little bit of an anchor here to come back and forth. But
Gotcha.
you know, the world's a pretty big place, and sometimes in business we say that the worst thing that you can say is it's because we've always done it this way. And I sort of look at that similarly from a perspective of where you live. You know, my family came to Philadelphia. The Italian side of my family came to Philadelphia in the early 1900s, and someone decided to live in this area because it was best for them at that time. And I'm not so sure that over 100 years later, it's still best for us.
Interesting. Love that.
Yeah, it's a great approach. I also like the idea of having an anchor. I say frequently that I love upstate New York, May through October, but November through May, you'll catch me in Tampa. And it seems like everyone that we've been speaking with recently, whether it's here in New York or around the country, they're interested in that Tampa market. So, so when I hear others almost they're looking at the recession that we're facing right now, and they're anticipating a housing downturn. But when I speak with people, and it seems like everyone wants to be in Tampa, I can't imagine that market not doing well for the next decade, the next 20, 30 years. As you are looking around the country and you're part of this community and you have these acquisition skill sets, how does that work when you're trying to team up with other professionals who have different skill sets, and you're trying to take down larger assets as more of a team player than the residential? I'm thinking you've done more on your own, right?
Yeah, so that, I mean, that really is the big reason that I one of the big reasons that I wanted to move into multifamily. I mean, I quickly learned that larger multifamily really is sort of a team sport. And I don't want to say that I've burnt out from the residential side, because I don't think that's necessarily true. I still have a bit of a passion for it and I still enjoy it. But, you know, Gino always refers to the I'm a mentality, and I did that for so long, right? Fixing toilets on my own, or if an appliance had to be purchased, then I'm running to Home Depot and purchasing it and scheduling the delivery, and finding the deals, financing the deals, managing the deals. Everything was pretty much me, and I know that the fastest way to grow and the best way to grow is to grow as a team. So I'm really looking forward to that. What I an interesting challenge for me, I guess, because I've done residential mostly, and as I mentioned earlier, residential really is okay. Bob, we're going to look at your W-2s and we're going to look at your specific financial situation and decide if you're eligible for this bank financing. I do not have experience with capital raising. And when I speak to other people in the community, when I speak to other people that I'm networking with, it's amazing to me that I'll talk to some people about that and they'll be like, "Oh, okay, well that's the easy part. I don't," and and they'll say like that's the easy part. Money we can get. I don't understand your skill set, right? And then it's like, okay, well this is truly how teams are formed, right? I think we all have certain skill sets, and sometimes we don't understand because it comes either natural to us or becomes second nature to us. We don't understand that other people don't have that skill set. So what is your skill set and how can you bring that to the table? I, I I enjoy underwriting deals. I enjoy looking at the numbers, crunching the numbers, and not only seeing if it works, but finding a way to make it work, right? And I'm finding that for some people, that's just not what they enjoy doing. However, they'll sit down with investors and capital raise with no problem, or maybe they'll manage the property, and that's where their strong strength is. So it's just about finding those right people.
No, absolutely. And when you're in the Northeast and your second market is Florida, it becomes challenging in certain ways. It's hard to be an acquisitions guy in
Yeah,
Florida when you're in New York. So
yeah.
a great skill set of mine had been acquisitions for the last many years in New York, but I'm able to get a lead, run 20 minutes to a property, quickly act if it's a good opportunity. I can't use that skill set from New York to Florida. So it brings us to different areas that I know, speaking for myself, I have to work on. I've been doing it a long time. So, okay, I want to get into the Florida market. I've been successful to a certain degree, but I have utilized raising some money to get there.
Hmm.
I've been in real estate a long time, but I've only been raising money for a year and a half or 2 years, which is a whole nother sport entirely. You began to try to based on you wanting to be in Florida. I know you like to underwrite, so that's valuable from afar. But what is your criteria in Florida? And do you think that you have to use that money raising technique to dig into that market?
So the opportunities that I've been looking at right now, based on my interest in utilizing a 1031, so far the opportunities that I've been looking at would mostly fall into a joint venture type opportunity. So, being able to bring certain amount of money with me from the properties that I'm selling, and obviously, to utilize a 1031 exchange, I would need to become a tenant in common
Hmm.
anyway. So if more falls in line with trying to find a partner to joint venture on an opportunity with, I do have a couple, I'll call them light conversations, where people have said, "Oh yeah, if you find the right deal, I have some money, I definitely would be interested." So I've spoken to people about capital raising, um, but it's really just been learning a little bit about them, learning about what would make them feel comfortable. But it's sort of high level at this point. Yeah.
Yeah, and it's geez to get the. Me and Steve were talking about this before we started the show, where we love real estate. I've made a career out of real estate and playing the small residential game for so many years. It's so much more straightforward. I had two different partners on two different portfolios, and you just plug away and build that portfolio. And then when you get into this larger commercial, and we have this fantastic template, value add deals, massive rent growth. So we're going into these buildings that we just acquired and jacking up rents from, a lower level to a higher level, and we're all doing so well with that. But it's not easy. We
Yeah.
find out in real life it's very doable. We're doing great with it, but it's challenging to do. And at this point in time, I guess we're all in that same boat. You're looking to go from Philadelphia to Florida and create that chemistry with a team. And I think you're still trying to figure that out. How do you fit in? How are people going to fit in with you? So, knowing that you've been doing residential for a while and you're going to look to get into some joint ventures, what does it look like to you in 2 or 3 years? Are you looking to take that next step where you're like, okay, I'm ready for a 20, 30, 40 units, something like that?
Yeah, so my 2 to 3 year goal is to 10x my unit count. So I think that's safely achievable in 2 years to become a partner in 100 units. I think that that happens by doing two joint ventures. I think two joint venture opportunities would probably, based on what I'm seeing right now and based on where I know I can pull out 1031 money, I think that I can be in two joint ventures that would probably get me to 20 to 25 units. And then I anticipate utilizing that experience to be able to then start to capital raise a little bit more and to either become a GP or LP in some larger opportunities. But right now, most of what I'm looking at is in the, let's say, 7 or 8 to 20 unit range. And really in that market, and you know that market pretty well, really, I'm not seeing anything over 13 to 15 units that would fit into where I could be from a joint venture perspective. So, we're really looking at those like 9 to 12 unit properties right now. So two of those gets me to about 24, 25 units. And then that experience, it's very interesting for me to see, and that, the people that we network with and the people in our networking circle, the trajectory after that first or second deal, in many books, they talk about the hockey stick curve, right? It seems like that first and second deal in multifamily really changed the trajectory. And so I'm planning to utilize that.
No,
So,
absolutely. And then it gets into that momentum once you get that going.
yeah.
And as you get into that next 10 or 20 unit, you're building different relationships and talking to a lot more people. And what I felt like I had to do going in, based on going from owning a lot of small to medium size, was scaling. Was
Yeah.
as you network it and you talk to more people, you're discussing what you're doing with everybody. So you may not need to raise money now, but in 2 years, when you're getting into that much larger property, you've talked to a massive amount of people that know what you're doing. So when you have that opportunity and you need to raise $1 million, you can go back and say,
Yeah.
"Hey, you remember what I told you I was doing? Now I've got a great deal. Are you interested in investing with me?" So that's I guess that is more of my journey. But I feel like that is it's so valuable when you're in the
Yeah.
Northeast and you're looking to invest in another area where money raising can really get you into deals.
Yeah. Yeah.
This is the Collecting Real Estate podcast. They say you have to have three of something to make a collection. So we're going to end this with three questions for you. Number one, in 5 words or less. What's the most important thing you've learned since you started collecting real estate?
It is a long game.
It is a long game. It is. We all
Yeah, and
say
I just feel like, going back to some of the things that I've learned from wholesaling and even from a few fix and flip opportunities that I've been in, those opportunities pay you one time, and it's good to get that cash flow to um, to help springboard you to the next level. But really and truly, being able to create an opportunity where you have cash flow coming in every month, for a long period of time, and then I look back at those properties that I purchased 2010, 2011. I mean, the value increase over time, the rent increase over time, and all of the things that have helped that to grow. you know if I had the opportunity to just quickly pull that money out when things were tough, or to quickly just jump out of the game when things were tough, I would have been regretting it today.
yeah, that money vanishes. Whether you used it for one thing or another, that's the beauty of building up that portfolio over that long period of time. It's building up that equity based on appreciation, rent growth, principal pay down, and sometimes we wish real estate was a bit more liquid, but over that long haul, it's beautiful that real estate isn't so liquid because it's money in the bank that grows and grows, and that's the most valuable part of real estate is that marathon approach. Second question for you: what are your 1 to 2 year personal goals?
So that's a great question. I think we already touched on the real estate goal, which was to 10x the number of units that I currently have. Um, 1 to 2 year personal goals include moving to Florida. They include growth on my personal health. So I've been on this journey where I continue to I participate in these triathlons and these fitness events. I actually have a 1 mile open water swim coming up this weekend. So I want to continue to grow on that. But I also want to use that as a conduit to help others focus on their growth, focus on fitness. I feel like in that realm, in the health and fitness realm, there are a lot of people that you look at and you say they're in really good shape, they're really chiseled, or they look like the picture of health, and it doesn't necessarily always resonate. Like, yes, they just told me they ran 10 miles, okay, and I feel like I don't necessarily fit into that realm, and I'm trying to help people who are trying to run that first mile, trying to run
Hmm.
that first 5K, or even just trying to walk. I did a piece of content the other day about healthy walking, and so I want to be able to utilize um, my voice to try and help others. And in the same way, in investing, I want to grow my podcast, and then, family goals. We have been very fortunate to be able to travel a bit over the last 2 years when some of the world sort of shut down. I think we traveled to Florida 4 times as a family in the last year. We actually went to Knoxville together. So, one of the things that my wife and I like to focus on, we have an 11-year-old daughter, and we like to focus on experiences over presence. And so, I want to continue to grow that. I want to continue to create experiences where we can travel together, see some great places, and have some awesome experiences. So.
Right, you've been down to Florida 4 times. I make the habit of, all right, I go to Florida to vacation, but also build this portfolio. You have that family where how much can you go to Florida and then say, bring your family to the beach and be like, all right, it's nice to see you guys for a little bit. I'm going to go look at some properties over there to find a balance of vacationing in your new market, but also taking advantage of getting more and more familiar with that market for
Yeah.
your future acquisitions.
So we do that, and we try to make sure we dial that in because, one of our trips was specifically just us in Disney for the week. We didn't go look at properties. We didn't go, have coffee with any of our friends in our network. It was just like, this is just us time. And then, a few of the other trips were, I'm going to work a couple days, and then we're going to do some things together a couple days too. So, looking at properties and networking and meeting people and meeting, and learning about the area. So yeah,
Awesome,
you're right.
awesome.
That is very important to have both sides.
Time and place for everything, especially when you're bringing your family to these destinations.
Yeah.
Last one, three. How can we and the listeners assist you? How do we contact you?
Oh, that's a great question. I appreciate that. I'm really having a lot of fun with this podcast. So if you can, subscribe to the Healthy Investor podcast. It's a great place where you'll learn from investors and entrepreneurs about their journey to success, and also the healthy habits and goals that they work towards. And to contact me directly, it's easiest to contact me via email, bobmastro1@gmail.com. So really appreciate you guys having me on, and I appreciate you allowing me to talk about my podcast and how to get in touch with me.
Of course, we'll put all that in the show notes as well.
Great.
No, and thank you, Bob. I appreciate you for inviting me to that podcast. I had an excellent time that day, and thank you for being on ours.
Great. Thank you.
Thanks, Bob.